Welcome back, traders. Welcome back to another episode of post-market analysis. Today, as discussed yesterday, was not so eventful, but still it's an eventful day because market showed a bit of negativeness and correction into the market, which we were all expecting. Because I was exactly telling the same point. Because if you could remember the yesterday's analysis, I exactly said, you could see the weakness in the candle here, because here there was a doji getting formed here. You got a hanging man forming here, and here exactly a smaller doji, because this is a complete indecisive candle at the end of a long rally, which is all supposed to happen. And I said, this is clearly showing the market is actually trading down, and we took a put position and we made profit in that as well. So now how do we see this now in terms of going forward, at least for tomorrow and day after tomorrow, however it is going to be. See, now the price action is very clear. Now this low of the previous day, meaning the Wednesday's candle low, is an important level for the market now, and then it has already been taken, and you can go for short, meaning that was today's idea. The minute it breaks the low, then we're going to go short, and we were expecting this target, but today's market did not give this target. It just stood in the upper side of the level. But now how do we trade this tomorrow? Let's go for a 15-minute chart. See how we're going to look into it. So now you see this is the level in the spot chart. It is 38,597. This is the low of yesterday's low. Now that becomes a key level into the market. We will not go for a buy unless and otherwise market retraces considerably down. Then if we find a buying candle, we can definitely go for a buy. At least for tomorrow, if you see any green candle here, please don't get into any buying position unless and otherwise this level is decisively broken and market sustains at least 115-minute candle above this level, then you can go for a call position. Till the time, just wait. See if you are able to get a rejection candle from here, which is likely to happen, because as per the price action, the market will at least form one more red candle into this, and then we can see a little downside flow into the market. Maybe a 38% retracement is what I'm looking into it. Maybe that's a too bigger retracement, because market is overall looking very bullish. We can at least get a 20 to 25% retracement also is possible into this picture. So I would prefer taking a put position if I'm getting a entry exactly getting rejected from this level. That's one point which I'll be looking at. Otherwise, if the market is breaking the today's low, which is this formed a base here, you could just see this entire market was forming a base setup here. In the sense, the market found support here, again went up, came back, it took support here, again went up, it took support here. Now this is forming as a base. Now if this level a base is broken tomorrow by any chance in the morning by gap down open, you can definitely go for a put position, because this base is being broken and the market technically has to fall down, and you can keep your first target to be at this level, which is roughly about, say, 38,280, and then the next target would be little big. If this level breaks, the next target is actually a huge, that is 38,000 is the other target, which is roughly about, say, we can see a movement of close to like 300 to 350 points is what is expected the minute this level is broken by gap down open. If it's a flat open, see the price action, see if the market is showing any bullishness above this level, because there is a channel which is getting formed here. Just don't get into a trade just because the channel is getting broken, because you're immediately going to face this particular resistance here, which would see a definite resistance, because after breaking this level, the market has not tested this level even once. This was a small test, but I would not consider this as a real test for this on this level. I would rather say the first time market retesting this level, it's not going to give it up. It's definitely going to have a selling pressure from this particular point. So we can see a selling pressure from this level. Don't get into any call positions in this range. Let the market show some rejection, get into a trade, keep your first target as this, and if this level breaks by any chance, you can keep your next target as 38,300 and the next target as 38,000. That would be the order of the day for tomorrow, at least for tomorrow. And tomorrow being Friday, and I know people tend to not to keep longer positions by this weekend, so you might not have a big trending day tomorrow. Maybe a slight sideways to volatile market, but by any chance, if there is a gap down open, it's definitely going to be a one way fall. It's 100% it's going to be a 100 fall, at least for 350 points, at least that is for sure, because 38,000 being a round number, it's going to hold the market at least for some time. But this fall is expected if there is a gap down open. If there's a gap down open, wait for a first 3-minute candle, put the candle high as the resistance, meaning the stop loss, and put your put position below that level, and you can ride the market till the time you find a pin bar which is getting formed. Any of these levels, you can, if there's a pin bar, just put the stop loss above it and then wait. If that level is broken, then you take the stop loss. If the level is getting continued, just ride the market and try to get all the points whichever you can do. So that's all for the today's analysis, and we will see how the market goes ahead from here. Thank you very much for watching our post-market analysis, and please do share and subscribe. And disclaimer, we are not SEBI registered research analyst. Please consult your financial advisor before taking any positions in the trade. Thank you once again, and good night, and have a great trading days ahead.